Okay, recording this video after close of trade. Tuesday, the 12th of May 2020 has just gone 5:37 p.m. Chicago time. Do hope you are doing well. Hope you had a good day's trading. Not put up a video for the last week or so. It's kind of been quiet, a lot of things kind of going on in the background, but market-wise been pretty uninteresting. But with today's activity, particularly the last 45 minutes of trade today, I think we've got a very important kind of turning point starting to line up, and I've been looking for this for quite a while. So going to talk about that. It's an overshoot being caught by the next highest time frame. I'm going to show you that on a bunch of the index kind of charts, and then we're going to zoom into the different time frames going down. Look at the daily, the 135 minute, the 45 minute, and the 15-minute charts, kind of zooming in to see what those charts kind of tell us. But first of all, just going to explain this overshoot being caught by the next highest time frame kind of setup. Usual chart setup here on the right hand side, we've got better sine wave, which is a price only based indicator. Calculates the cycles in 3 different time frames, the low, intermediate and highest time frame, and that allows us to plot support and resistance lines on the price bars themselves. The super thick lines are the highest time frame. The intermediate thick lines are the intermediate time frames, and the light little lines you see here are the lowest time frame. On the left-hand side, we've got everything to do with volume. On the bottom of the chart, we've got better momentum, which is a volume-based momentum indicator. And on the price bars themselves, we've got better pro-am, which gives us professional activity with blue bars and amateur activity with yellow bars. But what I'm going to focus on is just talking about better sine wave and different turning points in the lowest and intermediate time frame. You might recall when we were going through the big sell-off 10 weeks ago that we were trying to hunt for the low, and I had a video going out talking about hunting for the low in the E-mini, and I was looking for the trending move to be caught by the next highest time frame. So we break into a downtrend below this support level here on the lowest time frame, 2840s, and it goes into weakness at that point, and we're likely to be caught by the next highest time frame. So this is where the support comes in on a time frame which is 3 times. It's a 3-day. There's a factor of 3 difference between the time frames. So between the daily and the intermediate, it's 3 days, and then between the intermediate and the highest time frame, it's another 3 times, which is 9 days. So we're caught by support in the next highest time frame. Well, on the way up, what we've done now is break into strength and an uptrend above that resistance on the daily time frame. And when we shoot above that, we're likely to be caught by resistance on the next highest time frame. And that resistance comes in when we get the 6 cycles kind of lining up. And you can see these are the 2 lines, this red, the fast, and the blue, cyan, is the slow line for the intermediate time frame. The super thick lines are for the highest time frame. The super narrow lines are for the lowest time frame. The intermediate ones are these kind of intermediate strength lines. So when those cross and we get cyclical activity, it means we're going to have a cycle resistance point plot on that intermediate time frame. So it looks a little different than the downside. The downside move, went a long way. We've had a more muted kind of extension above overshoot above this resistance here, but timing wise the cycle is in due to start rolling us over, and we can see that on all the indices and all the different ways you can look at the indices. So as you know, there's 4 kind of major indices in the US. We got the S&P 500, we got the Dow, we got the Nasdaq, and we got the Russell. And there's 3 different ways of looking at those on our charts. One is to use the index itself, one is to use the futures on the index, and then the third way is to use the ETF based on that index. And all the volume kind of can be seen in those 3 kind of different forms of the index. And the cyclical turning point is looks almost identical between all of those different charts. So I'm just going to roll through those charts super quick because there's obviously 12 of them, 3 times 4. So we got this is the E-mini chart on a continuous contract basis on futures. This is the index, S&P 500 index. You can see that cross is happening here, and we've overshot. We're in due for that resistance. This is the ETF, the SPY. Again, the cross is in due. On this chart, all I have is the highest and intermediate cycles plotted, not the lowest one. But anyway, you can see it's in due for that cross at that point, and we've overshot resistance there. Dow, same thing. The cross happening in the next day. And this is the futures, YM, and you can see we've overshot resistance in due to be caught by resistance in the intermediate time frame here. This is the index of the Dow, same thing, got that cyclical cross happening with a bit of an overshoot, and this is the ETF. So we got the overshoot, we've got that cyclical cross in due in the next day or two. Russell's next, so this is the futures on Russell's. Let me just move this along so you can see what I'm looking at. So this is the futures on the Russell. We've got an overshoot, we've got that cyclical cross in due. This is the index itself. No volume data for the index on the Russell. So we've got that overshoot, we've got that cross in due. This is the ETF on the Russell. We've got that overshoot, and then that cyclical cross is in due. Then lastly, the NASDAQ. So this is the futures. That's crosses in there. That's happening as we speak. So would expect with tomorrow's activity, it's this, this continuous contract. So this is going to plot in the next couple of hours. We'll have a resistance kind of come in here on that intermediate time frame. On the index, on the NASDAQ, the cross is already in. So again, with tomorrow's activity, that high will be plotted with a resistance point. And then the ETF again. On the ETF, we just overshot it. Come in a couple of days ago. We overshot it just to the upside here. So that's kind of interesting that that's happened there. But that's what I expect, that resistance to be printed above those highs on all of those charts. And then lastly, the EEM is showing the same thing. So the EEM is a broad-based kind of ETF covering all of the emerging markets. And again here, it's an overshoot of that resistance. Didn't plot into strength at that point with red bars just because of the pattern with resistance at this point here. But you can see we're in due for that cyclical cross. We've overshot that resistance, and that's going to catch us on that time frame. So that for me is pretty significant. Now, as we go down the time frames on the E-mini, we can get a sense of the volume patterns that are going on here. So first of all, this is just the same thing again. This happens to be at ES.D, so this is day session only, but exactly the same thing's kind of going on here. You can see it's an overshoot. We're going to be caught by resistance on that intermediate time frame shortly. Go down a time frame, the 135-minute chart. There are exactly 3 135-minute bars in a day session of the E-mini. So that pullback there on an intermediate time frame is the lowest time frame on the next highest time frame. So they all kind of, the patterns kind of ripple through. So there we go. We've got this overshoot activity here, this highest time frame cross happening on the 135-minute chart here. What you can see with the volume patterns is this move to up to 3,000 here has been led by the amateurs, pushing up amateur bars over the last 2 days, and then a few days before that we had Rambo patterns pushing to new highs. So it's weak, it's being led by the amateurs at that point on this 135-minute chart. Under the lip, it's the kind of thing that's going to roll over when that cyclical kind of resistance kind of plays in. And you can see that last activity that we had for the day, I think it was the last 45 minutes, was pretty cracking to the downside. So let's go to the 45-minute chart. Again, 135 minutes divided by 3 gives us 45, so 45-minute chart here. So again, you can see the pushing up of that activity has all been led by the amateurs going up, and you've noticed over the last week and a half, the volume's been just falling off and off and off day by day, except today. We had a big volume day, and it all came in at the end of the day, selling down here. Professionals exiting at 2,900, bang, getting out of here, and that's an important blue professional bar. So it's the first blue professional bar we've had on the 45-minute chart since back here when we started this downtrend. And I was saying on the 45-minute chart, I'm not convinced the bottom is in, because we've not seen blue professional bars at the lows, and we've not seen exhaustion sell. So we bounced because there was a lack of selling at that point. And I think what we've done is just suckered in a lot of amateur money and activity into these highs, and they're going to be sorely surprised, because that was the professionals selling down 2,900 at the end of today. And let's see where this goes on the downside. Now, just to say, so this cyclical resistance that I'm talking about that's kind of coming in likely above these highs here, that's an important fulcrum point. My view is it's going to continue down. We're going to test those lows, because we've not tested these lows kind of properly. However, if we break back above it and close above it, it's the kind of thing that signals, right, there's actually no appetite to the downside, and we're just going to rocket ahead kind of just grab and go above that resistance on the intermediate time frame, and we'll never, kind of see these lows again. That test, this as much of the test as we'll have in the next couple of days, and then it'll just kind of rocket up and kind of go the other way. So for me, it's an important kind of fulcrum point that's kind of coming in at this point, and what I expect is it'll probably kind of test down. Who knows how far, whether we'll test to the lows or beyond or just a fraction of the way, who knows, but that fulcrum point becomes absolutely key, and if we come back above it after a couple of days of weakness, then we're away to the races. So there we go. On the 45-minute chart, we got that resistance here. We've just been playing and playing with it. Amateur bars into those highs here, and that's a below professional bar, getting the move going kind of on the downside. And then lastly, the 15-minute chart. This shows the weakness of this kind of activity. So if you look on price swings over the last few days, we've just been batting backwards and forwards, a little bit of overshoot to the upside, just showing that strength. We bounced off the lows, which shows that the market is strong to the upside because we bounce off the cyclical supports and then overshoot the cyclical resistances on the highs. So it's still been strong, kind of up here, but then with today's activity into the close, bang, 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 we sold it down really hard when we came back down at 2,900. To be honest, 2,800 for me is the level. If we get below that, say tomorrow, potentially Wednesday's a big day, Wednesday into Thursday, but 2,800 for me would be a confirmation kind of point. We get below that and we're going places, but this is an important inflection point just happened at the end of today. So you can see we broke above the trailing stop. Those professional bars we'll put in there. We broke down below that, and we got confirmed downtrend in both price and volume with that grey background being plotted there. So look for that turning point to kind of come up on your charts with tomorrow's activity, but I think the end of today's activity is pretty important, pretty prescient. So make of that what you will. There we go. So hope your trading is going well, and looking forward to the next couple of days' trade.